On Holding just put on an absolute masterclass in performance. They posted a third quarter for 2025 that was, well, nothing short of spectacular. But behind those big, flashy numbers, there's a really compelling story of a disciplined strategy and just flawless execution. So let's dive in and use the key insights from their CFO, Martin Hoffmann, to really understand how ON is building one of the world's next great sportswear brands. It all starts right here. This one sentence, straight from the CFO, is so much more than a marketing slogan. It's the North Star for every single decision the company makes. This deep commitment to being the most premium brand out there, that's the engine behind the incredible results we're about to unpack. It literally dictates everything they do. All right, so here's our game plan. We're going to start by defining what premium actually means to ON. Then we'll hit those record-breaking numbers, see where all that growth is coming from, dig into their almost unbelievable profit margin, and then wrap up by looking at how this incredible quarter has totally reshaped their ambitious future. Okay, first up, the premium playbook. Look, this isn't about luck. ON's success is the direct result of a very specific, very disciplined vision. It's all about translating a feeling into serious financial results. Now, this is what I find so fascinating, how ON thinks about the word premium. For them, it is not a price tag, not at all. It's an emotion. It's that feeling you get from the product's craftsmanship, its precision, its design, and it's something they know they have to earn from their fans over and over again with every single thing they make. So, let's see how this whole premium strategy actually translates into the financials. And spoiler alert, it has fueled an absolutely record-breaking quarter. I mean, these numbers are just staggering. Get this. In just the third quarter alone, ON hit record net sales of nearly 800 million Swiss francs. That is a massive achievement, and it just goes to show how incredibly strong the global demand for this brand really is. And we're not talking about a little bump here. That number translates to a 34.5% surge in net sales year over year, even after you account for currency changes. That is just explosive growth, especially at this scale. Okay, now here's a number that made everyone in the industry just stop and stare. A gross profit margin of 65.7%. That is exceptionally high, and trust me, we are going to break down exactly how they pulled that off in just a minute. And that profitability, it flows right down the income statement. A record adjusted EBITDA margin of 22.6%. That just showcases incredible operational efficiency and the pure power of their premium, full-price sales model. And this chart illustrates so perfectly that the momentum is literally everywhere. It's not just one channel doing all the work. Their direct-to-consumer business, their website and their own stores, grew over 37%. At the same time, their wholesale business with retail partners surged by over 32%. This is powerful, broad-based demand. Okay, so we've seen the what, the big numbers. Now let's look at the where. What are the key engines, both in terms of geography and products, that are fueling this incredible global growth? So looking at the global sales mix, the Americas is still their biggest market. No surprise there. But the key story here, the one to really watch, is Asia Pacific. It's now knocking on the door of 20% of ON's total business. It's gone from being a new frontier to a core pillar of the entire company. And this right here is why. I mean, growth is strong everywhere, a solid 21% in the Americas and an outstanding 33% in Europe. But then you look at Asia Pacific, wow, over 109% growth. We're talking triple-digit growth. That region is absolutely on fire for the brand. And you know what? It's not just about the shoes anymore. One of the biggest stories this quarter is their apparel line. It is no longer just some add-on, it's a full-blown standalone growth pillar. Sales literally doubled, growing over 100%. And for the first time ever, they sold over 1 million pieces of clothing in a single quarter. This is bringing in a younger customer and building a whole new dimension to the business. Okay, let's circle back to that jaw-dropping 65.7% gross margin. I mean, a number like that deserves its own section because it reveals so much about the health and the fundamental strength of ON's business model. So you have to be asking, how in the world do you hit a gross margin that high in the sportswear industry? It's almost unheard of. Well, as the CFO laid it all out, it's a mix of things. Some are temporary, sure, but many are structural and absolutely built to last. So here's the breakdown. You can see they had some temporary tailwinds, a one-time cost adjustment and some favorable currency effects. But the real story, The permanent story is in those structural strengths, a higher share of direct sales, the pricing power that comes from being premium, and real, durable efficiencies they've built right into their operations. And this is the most crucial point right here. This is the big takeaway. Even if you strip out all that temporary good news, the fundamental underlying profitability of the business is now operating on a completely new level, way above what they had even targeted for the long term. This is that premium strategy in action. All of this success, it isn't just for a single quarter. What it really does is give ON this incredible confidence and firepower to aim even higher. So let's take a look at how they are completely raising the bar for the future. And they are not being shy about it at all. Just look at this guidance update for the full year. They've raised their sales growth forecast, they've significantly boosted their gross margin expectation to around 62.5%, and they've lifted their adjusted EBITDA margin target to above 18%. That is a major upgrade across the board. What this kind of financial strength allows them to do is pretty remarkable. They can absorb potential challenges like currency headwinds, while at the same time pouring more money back into building the brand and innovation, and raise their profit forecast for the year. They literally get to do all three at once. It's an incredible position to be in. But they're not just thinking about this year, they're already updating their long-term vision. They're now measuring their sustained momentum by looking at the compound annual growth rate over a 3-year window, all the way from 2023 through 2026. And that new long-term target? It's a massive 30%. Just to put that in perspective, their previous 3-year plan was aiming for 26% growth per year. The fact that they're raising that to at least 30%, that just signals supreme confidence that this incredible momentum is not slowing down anytime soon. So as we wrap this up, it is crystal clear that ON is running its own race. They are not just meeting expectations. Like their CFO said, they are actively redefining what is even possible. And that leaves us with a final thought. The question is no longer just about how big ON can get. It's about how a brand this laser-focused on a premium experience will ultimately reshape the entire sportswear landscape for everyone.